Welcome options traders! I wanted to post a video here on currency quotes. And the reason is that, at least as of about mid-2019, we've seen a number of companies reporting strong earnings or better than expected earnings, and yet at the same time reporting some losses due to a stronger dollar. So how can that happen? Well, to understand, you need to understand currency quotes. And this is not just a new phenomenon. Actually, here's an article from the end of 2018, and look right down here. North American companies reported nearly $21 billion in currency value losses for the fourth quarter of 2018. So I know that many of you are investing in companies that have maybe a large presence overseas. And so as part of your investing and some of the research you need to do, it helps to understand what's happening with the currency quotes and how that might be affecting earnings. The first thing to understand is that every single country has a standardized three-letter code. So we have USD for the US dollar, GBP for the Great British Pound, JPY, Japanese yen, and so on. Fairly straightforward, except down here where it says Swiss franc. A lot of traders look at that and go, what's up with CHF? Well, that's actually the formal name of the country. It's the Latin version, which stands for Confederation Helvetica. That's the way that Switzerland officially refers to itself. And in fact, if you look at a website that's actually based in Switzerland, you'll see the name of the website right there in your browser, followed by .ch. So that's how they came up with that. CH is for Switzerland and the F is for franc. So a little bit of trivia for those of you who might be trying to locate the Swiss franc. The first thing to really understand about currencies is that they are always quoted in pairs. You can't say that the dollar is rising or that the dollar is falling. Compared to what? We have to have some reference point. See, normally when you're quoting other things, let's say the price of IBM, and we say IBM is rising, we know that we're talking about in terms of dollars. Or the value of your home is rising. People know that you're talking in terms of dollars. But that doesn't work when you're talking about a currency. We have to compare it to something. So currency quotes show the value of one currency in relation to another. Here's an example of how a currency quote will look. Here's the Euro US dollar quote. It doesn't matter what the currency pair is that we're looking at. The currency on the left, right here in this example, the Euro, is called the base currency. It's really the thing that we're quoting. The currency on the right, the dollar in this example, is called the quote currency. Sometimes you'll also hear it called the terms currency. You might also hear it called the counter currency because it's the currency counter to the base. But the reason it's called the terms currency is that we are quoting the euro in terms of dollars. And so this price right here, this value, is the value of a euro in terms of dollars. In other words, you have to pay $1.12 to get 1 euro. So I know it can be confusing, so let me show you an easier way to look at this. First of all, understand that the currency on the left, again, regardless of what the pair is always 1 unit. That's always fixed. And then I want you to read the slash as the phrase quoted in or priced in, and then whatever the currency is on the right. So look how much easier it is if you read this as 1 euro quoted in dollars is 1.12. So I know that that 1.12 figure is actually dollars. So the format can look a little strange, but they do that just to condense it. But here's a little insight that can help you to understand. Forget about currencies. What if we were looking at IBM? And let's say that IBM is trading for $150 per share. If I wanted to write that in currency terms, I would write IBM in terms of US dollars is 150. That's really all we're doing. The thing on the left, IBM, how is it priced in terms of some currency, and then the quote actually shows you what that value is. So it's really quite easy once you understand how to read the quote. Now, currency quotes are listed in one of two ways, and these are sometimes called the terms of the quotes. If the quote is in American terms, the US dollar is on the terms side. In other words, it's on the right-hand side. And again, that's sometimes why it's called the terms currency. If the quote is in European terms, on the other hand, then the foreign currency is on the terms side or on the right-hand side. So if you're looking at the Euro US dollar quote, this would be in American terms because we are quoting the euro in terms of US dollars. There's a couple other terms that you need to understand, which is direct versus indirect. These are important also because sometimes your broker's platform might say, how do you want these displayed, as direct or indirect quotes? So what does this mean? Well, first of all, understand that each quote may be direct or indirect depending on your country. It really just depends on your perspective. With a direct quote, the domestic currency, your currency, is the quote currency. It is the currency on the right-hand side. And again, it tells how much you must pay for 1 unit of the foreign currency. So going back to Euro US dollar here, if you saw this, we would say this is a direct quote for us. Because assuming you're here in the US dollar is on the right. We are quoting in terms of dollars. So for us, it's a direct quote. Another way to understand it is that the most logical question we would have from the US is how much do we need to pay for 1 unit of a foreign currency? So this is directly quoting the euro for us. Of course, there might be times that we want to flip this. And again, your platforms might even allow you to flip it. But how could we figure out the quote if we did want to invert this and look at the US dollar euro quote? Well, it's actually quite easy. So going back to Euro US dollar at 1.12, all you need to do is to take that quote on the right and divide it into 1. And that's also going to invert the quote. So if I saw this quote, Euro US dollar equals 1.12, and I wanted to know the US dollar versus euro, I would take 1 divided by 1.12, and that's going to give me 0.8929. And again, that's going to invert that quote. So I would instantly know that the US dollar euro quote is 0.8929. In other words, 1 US dollar costs 0.8929 euros. So this would be a direct quote for somebody outside of the US and would be an indirect quote for us. In the world of currencies, there are some that are most commonly traded that are called the major pairs. They're going to be the Euro US dollar Japanese yen, Great British pound US dollar Swiss franc, New Zealand dollar US dollar, the Australian dollar US dollar, and the US dollar versus the Canadian dollar. The bottom two that I've highlighted here in blue are also sometimes called the commodity currencies because each country, here Australia and Canada, are both rich with commodities. And so rapidly changing commodity values can also influence their exchange rates. Of course, if we have major pairs, it only makes sense that we have minor pairs, and we do. Currency quotes not including the US dollar are considered the minor pairs, more commonly referred to as cross rates. So if somebody says, what are the currency cross rates? Or I'm looking at a cross rate table. They are currency quotes where neither of the quotes in there is the US dollar. So you might see the Euro Great British pound would be a minor pair or a cross rate. Great British pound Japanese yen would also be a cross rate. If you're trading these, you're also going to find that they're usually far more illiquid, have wider bid-ask spreads. But just in case you hear the minors and the majors, that's what they're referring to. So again, I know it can be confusing when people are first looking at currency quotes. Let me show you a little trick here to make it simple. All you need to do is multiply if you are converting from left to right. In other words, the currency on the left, and you're trying to change it for the currency on the right. And then you will divide if you're converting from the currency on the right to the one on the left. So let's try a different example. Let's say that we have the US dollar Japanese yen trading for roughly 108 right now. 1 US dollar trades for about 108 Japanese yen. So let's say that we're here in the US, we're trying to exchange dollars for Japanese yen. We're going on a trip to Japan and we want to convert them. Because I'm converting from the currency on the left to the one on the right, I just multiply. So if I have 1,000 US dollars that I want to convert into yen, I multiply by 108. I would have 108,000 Japanese yen. And then conversely, if I'm coming back from Japan, I've got a pocket full of yen and I want to convert it back to dollars, I just do the inverse. I'm going to divide it. So if I have 108,000 Japanese yen and I'm trying to convert to dollars, I'm moving from the currency on the right to the one on the left. I divide. I would take my 108,000 yen divided by 108, and that would tell me it's equivalent to 1,000 US dollars. Another area where new traders get tripped up is to figure out which currency is the strongest. So let's take a look at the euro US dollar again, trading for about $1.12 right now. Which currency is the strongest? Well, here's really the easiest way to figure it out. If the currencies were on par with each other, or maybe what we would call trading at parity, the quote would be 1. 1 US dollar exchanges for 1 euro. But take a look at what the quote is telling you now. We here in the US have to pay $1.12 just to get 1 euro. We have to pay more for 1 unit of their currency. So the euro is stronger than the dollar. On the other hand, let's go back to the US dollar Japanese yen quote at 108. Which currency is the strongest? Again, if they were trading at 1, a quote of 1, they would be on par with each other. But notice that in Japan, they have to pay 108 yen just to get 1 unit of a dollar. The dollar is much stronger. So the thing with currencies is to remember that you are quoting the base currency. So let's go back up to the euro US dollar here at 1.12. What's going to happen if you see that number rise? It's going 1.13, 1.15, 1.18, and so on, whether it's days or weeks, months later. What's happening to the quote? In that case, the euro is rising against the dollar. Because remember, we're quoting that base currency. That's the thing we're trying to put a value on. We're just valuing it in terms of dollars. So as that quote rises, in that example, the euro is getting stronger. Conversely, if that number is falling, 1.11, 1.10, and so on, then the euro is falling against the dollar, or equivalently, you could say then the US dollar is rising against the euro. But you can see where it can get tricky. The standard format is to say euro US dollar, and if you're watching that number fall, the dollar is getting stronger. And again, that throws people because they don't realize the thing that we're quoting is the currency on the left. As that quote falls, it is the currency on the left that is falling against the other. Let's try another example here with the US dollar Japanese yen. You see it quoted at 108. And later on, days, weeks, months later, we see that number rising. 109, 110, and so on. What's getting stronger? The dollar is rising against the yen. Or conversely, the yen is falling against the dollar. And that's because Japanese are having to spend even more for just 1 unit of currency. And of course, the opposite is going to be true. If we see that number falling, going 107, 106, and so on, then we would say the dollar is falling against the yen, or the Japanese yen is rising against the dollar. So again, it can be confusing, but the thing that you have to remember that is going to make it easy is that the thing that you are valuing is the currency on the left. As that quote rises, it is the currency on the left that's getting stronger, and as that quote falls, it is the currency on the left that is getting weaker. So how can this affect a company's earnings? How are we seeing companies that are reporting strong earnings but then saying, well, they would have been strong had the dollar not risen? Here's what's happening. Let's say that we start a little company and we're going to do it in Japan. So we take our US dollars and we want to convert it into Japanese yen. And let's just, for simplicity, say that it's trading at 100. We're going to take 1 million US dollars times our quote, because we're moving from the currency on the left to the one on the right, and we would have 100 million yen. So we take that yen over there, we build a factory, we do sales, whatever it is we do, and we increase it. And our earnings are now showing 110 million yen. Did we increase? Yes. We had 100 million yen. We're now up to 110. We're making money. But now here's where things get tricky. We have to bring the dollars home, what's called repatriating the dollars. So now we want to bring this profit home and report it here in the US, but now let's say that the quote has risen. from 100 to 115. How much did we make now? Well, if I want to convert from the currency on the right, Japanese yen, into dollars, we have to divide. So I take my 110 million yen and divide it by 115, and I'm left with a little over $956,000. So we took $1 million, US dollars, converted it to yen, made a profit on it, but when we brought it back home, it was the rising US dollar that made the value of our earnings fall. So sometimes people say, how could that be when the dollar's getting stronger and we're a US company? Isn't that good? It's good if you're holding dollars, not if you're holding Japanese yen. So now hopefully this will help you to understand when you're taking a look at quotes. Here's one from CNBC, and it will be very easy to track what's happening with the dollar, perhaps in some of the countries where your key holdings may be operating. And for those who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course and a brand new strategy lab for 2019 at optionsatoz.com. Also, please join us on the Facebook trading group Options A to Z, and you can find a link in the description below.